for this quarter, I have two picks I want to quickly highlight. One is Gray Television, symbol is GTN. It's $9 a share, down from the mid-20s. Largest broadcast company with 90% of their TV stations in number one, number two markets. With that local presence, they do quite well with political advertising, and we know that 2024 is going to be a presidential election year. So again, that should help meaningful with earnings and free cash flow generation this year. In addition, management spent close to $500 million over the past 2 years building out kind of a state-of-the-art television and film studio down in Atlanta. NBC's occupying majority of that with a long-term lease, so that asset flips from being a free cash flow use to free cash flow positive. And so we think, there's potential for in excess of $2 billion in free cash flow in the next 5 years. Stocks priced today at greater than 70% free cash flow yield on the step up in earnings from free cash flow this year with political advertising, and close to a 50% earnings yield. And the long-term debt also, like to highlight, looks very attractive in the low 70s. And then my last name I want to mention is Nabors. So a contrarian name, Nabors, symbols NBR. Shares near $75 a share. Stocks down close to 50% over the past year due to weakening commodity prices. And we think domestic rig count's going to be flattish over the coming months. But what makes Nabors kind of stand out is the international market has been strengthening from a protracted trough. And Nabors has significant presence here. We think that's being overlooked. Just their JV alone with Saudi Aramco can add, in the next 10 years, 5 rigs a year at about 10 million of EBITDA per rig. That's going to be close to 500 million of EBITDA just from that JV. And management's been focusing all their free cash on debt reduction, eliminating $2 billion since 2018. And their balance sheet has significantly lessened the amount of risk given the level of debt. And near-term maturities are limited. And near-term debt average ending this year, probably net debt will be closer towards 2 times. And valuations near the all-time lows. Enterprise value EBITDA is 3.5. Market cap's near 1 times cash flow. And their free cash flow yield is greater than 50%. So we think Nabors, again, wouldn't take much to get the stock actually moving, much higher over time.